Welcome to Explain the Charts. Today, August 1st, 2025, we're diving deep into Apple stock, ticker Apple, unraveling recent news and dissecting its price action across various timeframes. The big headline is Apple's stellar fiscal third-quarter earnings, which were reported yesterday, July 31st. The company crushed analyst expectations, reporting a record $94 billion in quarterly revenue, up 10% year-over-year, and diluted earnings per share of $1.57, up 12%. This impressive performance was largely fueled by stronger-than-expected iPhone and services sales, signaling robust demand for Apple's core products and ecosystem. Despite this overwhelmingly positive news, there are some conflicting signals in the market that we need to address. For instance, investment bank JPMorgan recently cut its price target on Apple from $240 to $230, citing mounting challenges for the iPhone maker, a sentiment that seems at odds with the strong earnings. Additionally, regulatory concerns, particularly potential Section 232 tariffs under the Trump administration, are noted as an ongoing overhang by firms like Morgan Stanley and HSBC, influencing their hold ratings. The broader analyst consensus, however, remains moderate buy, with an average 12-month price forecast of $234.94, implying a significant upside from current levels, ranging from a low of $170 to a high of $300. Now, let's turn our attention to the daily chart to understand the broader trends and how these news events align with market behavior. Apple has generally been in a strong long-term uptrend, although it has experienced periods of significant volatility and corrections. Looking back to early 2024, we saw the stock rebound from around the $170 mark in late March and early April, demonstrating strong support in that region. A notable surge occurred in mid-June 2024, where the stock jumped significantly from the low 190s to break above $210, accompanied by substantial volume, indicating strong institutional interest. Another critical period was early April 2025, when Apple experienced a sharp decline from the 220s, hitting lows around $172 on April 8th. However, this was immediately followed by a powerful reversal on April 9th, with a remarkable 15.64% single-day gain on extremely high volume, pushing the price back towards the $200 level. This rapid recovery highlights the underlying buying strength and investor confidence in Apple's long-term prospects, effectively establishing the $170 to $172 zone as a very strong support level. More recently, for July 31st, 2025, the daily candle shows a close of $207.57, reflecting a slight drop of 0.44% in the regular trading session. This might seem contradictory to the positive earnings news, but it's crucial to understand that daily close prices typically represent the regular market hours. To truly capture the immediate market reaction to yesterday's earnings announcement, we need to zoom into the 15-minute chart, specifically focusing on the trading activity after 7 p.m. Universal Time coordinated on July 31st. Here, we can see the stock's remarkable after-hours performance following the earnings release. While the daily close was $207.57, the 15-minute candles reveal a significant surge that took Apple as high as $217 after market hours. This clearly aligns with the news reports indicating that Apple stock rises post-earnings, suggesting a very bullish reception in extended trading. The immediate volatility after the announcement is also evident, with large price swings and high transaction volumes, as traders reacted swiftly to the new information. The 207.16 level acted as a strong intraday support, marking the bottom of the initial post-earnings dip before the rally. The price quickly moved past 209 and established new resistance levels around 214 to 217 in the after-hours session. Now, let's switch to the 1-hour chart to analyze the recent short-term price action leading up to yesterday's events. While our 1-hour data in this dataset only extends to July 22nd, It shows the stock maintaining a range generally between $208 and $215 in mid-July. The $212 level appears to have acted as a minor resistance point in the past week, with several candles struggling to break convincingly above it. Conversely, the 208.50 level has provided some short-term support, preventing further declines on multiple occasions. For short-term traders, these intraday support and resistance zones are critical for identifying potential entry and exit points. The increased volume observed in the lead-up to earnings, particularly on the 15-minute chart yesterday, indicates heightened interest and a more active market. Shifting back to the daily chart for our broader outlook, let's consolidate the reasons to be bullish or bearish on Apple. Bullish arguments are strong: exceptional earnings performance, robust iPhone sales, and continued growth in the high-margin services segment. The anticipation of new AI features in iPhones this fall, as highlighted by Goldman Sachs, could also drive significant upgrade cycles and boost demand. The consensus moderate buy rating from Wall Street analysts, with an average target of $234.94 and some as high as $300, provides a positive long-term price outlook. On the bearish side, the primary concern revolves around regulatory risks, specifically the potential for Section 232 tariffs from the U.S. government, which could impact Apple's supply chain and profitability. JPMorgan's recent price target cut, citing mounting challenges, also adds a cautionary note, suggesting that even with strong earnings, underlying headwinds might persist. Additionally, the stock is currently trading near its recent highs, which could lead to some profit-taking in the short term, especially if the broader market experiences a correction. When deciding when and at what price to trade, observe the volume alongside price action. Periods of high volume on breakouts or breakdowns provide stronger confirmation of the move's validity. Monitor major moving averages. A cross above key averages could signal bullish momentum, while a fall below could indicate a downtrend. Look for candlestick patterns, such as engulfing patterns or hammers near support and resistance, to confirm reversals or continuations. To recap, Apple has strong underlying fundamentals, underscored by its recent beat on earnings and robust sales figures. Key price levels to watch include the immediate support around $207 to $208, which is the daily close from July 31st, and where initial post-earnings trading found footing. The significant after-hours rally took the stock into the $212 to $217 range, suggesting that this new zone will likely be the immediate resistance to overcome for further upside. The prior resistance in the low $220s, which acted as a ceiling in mid-2024 and early 2025, will be a critical psychological barrier if the current momentum continues. On the downside, strong historical support exists around the $190 to $195 area, and a critical long-term support lies firmly at the $170 to $172 level, proven by the swift rebound in April 2025. For the short term, the market's initial bullish reaction to earnings suggests Apple is likely to test the $212 to $217 range. A break above $217 with strong volume could quickly lead to a retest of the $220s, with a 60% likelihood given the positive earnings and AI anticipation. However, if the broader market turns bearish or if regulatory fears intensify, a retest of the $190 to $195 support is possible, perhaps with a 40% likelihood, especially if the rally from earnings fizzles out. Keep a close eye on any new developments regarding the proposed Section 232 tariffs, as these could introduce significant downside pressure, overriding positive earnings sentiment. Also, watch for any further details or announcements about Apple's AI initiatives, as concrete progress here could provide another strong catalyst for growth. Finally, monitor overall market sentiment and major economic reports, as they can heavily influence even fundamentally strong stocks like Apple.